Thank you very much for being here. It is my real privilege to be with you for the next half an hour or so. And I want to make one comment about the, God, I really feel fancy with these two things right here and all these wires. But you're at a really interesting time right now to have access to the information that was behind me when I spoke out front, the ticker tape. For those of you who want to dial the calendar back about 5 years, we had a terrible meltdown in the stock market following the 2008 beginning of the recession. And stock prices went down significantly. But that's past history. We've had 4 or 5 really good years in the stock market leading up into where we are today. And there are lots of people that expect a correction in the stock market for it to fall 10 or 20%. We have earnings coming out this quarter for the third quarter beginning this week, and we'll go throughout the month of October, and people will be watching the earnings and the quality of those earnings. So you're going to have a lot of fun paying attention to these stock prices as you come in here to see how they behave, to see whether they continue to go up or whether they've disappointed in their earnings and they might slip down. And some might go down like this. So you're going to have a lot of fun. Pick out a symbol, pick out a company, and come in and look at it and follow it this month, because I promise you, one thing will happen. It'll move. It'll either move up or it'll move down, but it's going to be exciting. So you're at a really interesting time in the economic cycle and the investment cycle to be observing and beginning to get educated on what that ticker will tell you. So here's what I want to do. I want to give you a little bit about Suntrust and the bank, and then I want to give you much more about purpose, which I touched on out there in my initial comments. So I want to drill down into that, and then I want to open it for questions. And as a matter of fact, you won't hurt my feelings if you ask me a question during the middle of this. So if I say something that stirs a thought or raises a question, raise your hand. We'll stop and I'll be glad to address it. Do the best I can to answer it. And if I cannot, my colleagues from Suntrust, I'm sure can. But Suntrust has been a commercial bank in this community for 125 years. Started in 1891 in downtown Atlanta. Today, we have assets, primarily loans that we've made to individuals and companies that total $175 billion. We are the nation's 9th or 10th largest bank, and there's some 8,000 banks in the United States, and we're number 9 or number 10, so we're very big nationally. We are Georgia's biggest bank by far. And if you measure us by market share, which in any of your course studies, you'll be talking and listening about market share. How much market share does Coca-Cola have? How much does UPS have? Well, Suntrust here in Atlanta, Georgia, in our hometown, has market share of about 25%, 25 or 26%. So it's the number 1 share. So that's who we are. We are a heavy regulated business. We run our business for our shareholders, but we have a regulator, somebody who monitors our behavior and checks up on us to make sure we're doing the right things when we make a loan or when we decline a loan. And that's the Federal Reserve Bank. I'm sure you've heard of the Federal Reserve. Mrs. Yellen is now the new chair of the Federal Reserve. She has just replaced Ben Bernanke, who led us through the Great Recession. But they regulate us and they watch us, and that makes things a little different for us as a bank. And the regulations have increased greatly over the last 5 years because of the economic recession. And if you do bank with us, and I hope you do, you need to know that your money's safe, and it's safe for 2 reasons. One is the government insures your deposits. And if the government's not strong enough, know that Suntrust has 10% of its assets in capital, meaning that for every dollar of a loan that we have on the books, we have a dime back in it. So we're very, very strongly capitalized, very safe bank, and also government guaranteed. We're in 4 main businesses at Suntrust. And like a lot of other banks, they would categorize themselves this way too. We are a retail bank. We work with consumers, work with individuals. We're a wholesale bank. We work with companies, corporations, commercial entities. We're a private wealth bank. We work with wealthy people on estate planning and trust and endowments and foundations. And then our 4th line of business is mortgage. We make mortgage loans. When you're ready to buy a home, I hope you'll come to Suntrust and talk about getting a mortgage from us. So those are our 4 business lines. Before I get into purpose, I want to tell you the 4 things we learned during the recession. Our institution had an aha moment as we kind of circled the wagons at the end of the recession. Some say it's still going on. I say it's over. But we learned 4 things in the recession. One is we had too much of our money in residential housing. As a bank, we had too much money in residential housing, either in the form of a mortgage or in the form of a construction loan or in the form of a home equity line. So we had to rebalance ourselves. We had to go back and have some discipline and say, we really shouldn't have 35% of our assets in single-family housings. That's too concentrated. We need to spread it out amongst other types of loans and get away from that. Second thing we learned, and this is sort of a fundamental in Banking 101, which is you always need to know what the secondary source of repayment is. It's easy to spot the primary source, but if the primary source is not there, you have to have a backup or a secondary source. We learned that in this recession. Third thing we learned is do not cut corners. There are processes out there that were built to be followed, built by smart people who understood what we needed to do to control our business, and we should never cut corners and deviate from the processes that we had in place. Said another way, you got to dot all your I's, you got to cross all your T's every time. Make no exceptions. And then the 4th thing we witnessed was the great need for financial education and financial literacy in this country. I made a quote out there earlier that in a questionnaire, 60% of the respondents, and these were adults, graded themselves, self-graded C, D, or F, their capabilities with financial education, financial literacy. We know that the great preponderance of consumers in the state of Georgia have less than 30 days of rainy day money / savings if they lose their job. And there are other statistics like that. So we, Suntrust, said to ourselves, we have an obligation to the communities where we serve to go out and help with financial literacy and financial education. That is our responsibility. We can't pass that on to anybody else. We take deposits and we make loans in our communities, but we cannot just do those 2 things. We have to help educate all of the consumers, all of the people, young and old, in the communities where we serve to make them financially literate. It was observed not only by us, but by people in Washington and elsewhere, that the financial crisis, in large part, was created because of the consumers not being financially literate. So that's our job. And so therefore we said to ourselves, what is our purpose as an organization? What is our purpose? Why do we come to work every day? Why do we sign up to be a teammate at Suntrust and come in and do business with consumers, with corporations, with wealthy individuals, or in the mortgage business? Why do we do it? We have to believe that we are lighting the way to financial well-being. Every one of our teammates, we hope, has that passion to do that every day during their job and to think about that as their purpose for working at Suntrust Bank. Now, that's a really major difference from a lot of companies around the United States. It's a major difference from a lot of banks in the United States because every company has a mission statement. Most every company has a value proposition, but not many companies have a purpose for being, and we do, and we believe in that greatly. So, we have a foundation that supports our bank here in Atlanta, and we give away money 3 times a year, year after year after year. Our foundation contributed some money to Clayton State University for the ticker and the other information board. And we did it not only because Clayton State is a great citizen, is doing a wonderful job educating people in our state and in our metropolitan area, but because it matches with our purpose. We want 50% of the money that we give out every year to go towards financial education or financial literacy so that we can light the way to financial well-being. And people ask, well, what do you mean by financial well-being? What is that? Well, it's different for you than it's for you, than for me, for you. It's different for everybody. But once you ascertain and understand what financial well-being means to you, we want to help you get there. If it means saving money so that you can provide your aging parents a nice retirement care center, then we'll help you get there. If it means wanting to pay off your house in 15 years as opposed to 30 years, we'll work with you towards that. But we want all of our clients at Suntrust to establish what it means to them to be financially well off or to have found their financial well-being, and then we want to help you get there. So let me give you some examples about how we do this. And these are real-life examples of what our teammates have done during their time at the bank. We had, and you may have seen this, we actually made a commercial about this. It was so powerful. But a young couple with young children, striving to make ends meet, you got to pay in this case, their mortgage on their house, got to put food on the table, got to clothe the children, got to have gas in the car, we got to do so forth and so on. So you have to do all that. And then all of a sudden, their mother dies and their aging father, who's not able to take care of himself, needs help. So they come to Suntrust and say, we need help. Financial well-being to them meant being able to take care of their aging father. And so what we did is we worked with them and came up with a plan where they could borrow some money against the value of their house, the equity in their house, and they built a little addition so that their father could move in with them and be taken care of by them. And it was a lot less expensive for them to do that than it would be to put him in a nursing care unit or a hospital or wherever else. And it made them feel good about what they were doing. The emotional connection between our banker and that family was so powerful because our banker spent the time listening, understanding the needs, and then trying to figure out the solution that would make sense for them financially, that they could afford, that would accomplish what they needed to have accomplished to meet their financial well-being. And they did it. And it's a wonderful story. And I wish all of our examples were like that, but they're not. But many are. So that's an example of how we try to fulfill our purpose on the retail or the consumer side. Let's talk about on the commercial or the corporate side. When I think corporate, you think of Coca-Cola, you think of UPS, you think of Delta Airlines, but go down and think about the man or woman that has a plumbing supply company who is just selling plumbing supplies to plumbers, small business, commercial. And that person's whole livelihood depends on that business. That they have built this business so they can support their family and they can create an asset that they can have, that they can sell when they want to retire and live off those retirement proceeds. So our job in that case is to advise the company on strategies that they can undertake that will keep their business successful. We're not running the business, but we're helping them finance their business so they can have enough inventory to sell to their customers, so that they can collect their bills from their customers and so they can pay their bills on time, so that they can retain the ownership in that company, so that they can grow that company, so the value of that company increases, just like you'll see on the stock ticker up there. When the values increase, it's seen in the stock price. In a privately held company, the values increase over years by earning money every year and keeping it in the business and growing and growing and growing. So our job is to advise people on how to finance their business so they can sustain the growth in their business and they can build their business and make it a bigger, more successful business. We had a client who was down in south of Atlanta, maybe an hour or so, and he was a manufacturer, and he was having trouble with his accounts receivable. So he would manufacture something and he would sell it to somebody, and whoever he sold it to wasn't paying him on time. And so because he wasn't getting his money, he was running out of cash. And when he started getting short on cash, he couldn't go buy the raw materials to start building his product, so he was about to go out of business. So we came in and worked with this man in this case and his wife, who also worked at the business, and said, here's what you need to do on your accounts receivable. Here's how you need to sell to your clients. Here's the demands that you need to make on your clients to get paid in time so that you can get that cash and put it back in your business, buy some raw materials and build another good and sell another good and then collect the money again. So we educated this business owner on the cash cycle so that he had enough cash to run his business. That example I'm giving you was like 1982. He sold his business in 2012, 30 years later, for a lot of money. And to this day, he gives us credit for building his business. And we say, no, we didn't build your business. You built your business. You ran your business. You told us where you wanted to go, and we just helped you get there. So that's an example on the commercial side. Let me give you an example on the private wealth side. You know, you always hear money can't buy happiness, and you know, rich people, they have different needs than the rest of us. Well, I don't think money can buy happiness, but rich people don't have any different needs than you or I. They might have more assets, but they have the same issues they have to deal with. We, through our private wealth area, will set up trust for families. And a trust means that you can put it in an asset or in an account that nobody can get their hands on it. Your creditors can't get it. Your kids can't get it. Your mama can't get it. Nobody can get it. It's in a trust. It's protected. And you state what you want the money in the trust to go to. Well, we had a very, very wealthy family, pretty big family. There were a husband and a wife and 5 children. And they were very wealthy, had made a lot of money. And their 5th child became disabled and had very special needs. And the parents were getting old, and they were worried about the child. There were 4 other siblings, and they weren't sure whether those siblings could take care of their other sibling that was disabled and had special needs. So we worked with the family and set up a trust. And one of our bankers will be the trustee, and we'll manage the money they left in that trust to take care of the needs of that child that became disabled. Now, we can't do everything for that child. We can do whatever we can do within the powers of the trust and the money that was left in there, but the parents, as they were aging, felt relieved that they had taken care of this child that needed taken care of by empowering Suntrust to take part of their assets and put them in a trust, and the income off that trust would take care of the basic needs of that child for the rest of her life. So that, in that case, it wasn't so much about financial well-being being a dollar amount of money you wanted to accumulate or assets that you wanted to accumulate. It was about giving the peace of mind to the parents that their child would be taken care of through a financial instrument that the bank could manage for them forever and ever. So that's a different type of financial well-being, but yet we fulfilled our purpose, because that trust officer in that case, sole purpose when she comes into work in the morning is to take care of that young child. Not so young anymore. But there's another example. And I guess the most blatant example of purpose is mortgage, because it really still is, even what happened to the housing industry over the last 5 years, it really still is the American dream to own your house, own your home, to get a home. And so our mortgage loan originators are there every day to help people get homes, to help people be able to borrow the money to get their home. And following the regulations that were given to us by the Federal Reserve Bank, we have to make sure that if we help you get in a home, that you can pay for it. We're not just trying to get you in a home, wash our hands and say, good luck, enjoy your home. We want to make sure that the home we put you in is sustainable for you, so that you can be there as long as you want to be and you don't get overextended. Now, there are lots of things that can happen to one's income, I get that, but the purpose part of this is when we sit down with prospective home buyers, we're going to ask a lot of questions and we're going to get a lot of information and we're going to know everything we can possibly know about you, not because we're nosy, not because we want to gossip about you, but because we want to know really what you're made of, what your goals are, and what can you afford and what can you sustain for a period of time so that you stay in the house. So all of our mortgage loan officers are purpose-driven as well. So I hope those 4 examples give you some sort of idea about what we mean when we say we're purpose-driven. Nothing gives me more pleasure, and I've been with this bank for 40 years. Nothing has given me more pleasure over the 40 years I've been there than seeing a company grow and succeed and create wealth for the owners. Nothing has given me more pleasure than being able to work with a consumer who might be in a little bit of a jam and help them understand where they need to go and set a path for them to get out of their jam and to move towards financial well-being. I ran our trust department for 10 years. Nothing gave me more pleasure than that case I told you about the disabled child. And it was because my purpose for being there was to do that. And I think if you can get all of your teammates in an organization, whether you're a bank or whether you're Delta Airlines or whoever you are, if you can get everybody to believe and commit to their purpose, you have a much more vibrant, energetic, and successful organization. And the stock analysts on Wall Street, the same people that drive those prices you're going to see every day, they will tell you that purpose-driven companies are more successful than others for the reasons I just told you, because the employees, we call them teammates at Suntrust, put their heart and soul into it and are doing it for their purpose to light the way to financial well-being. Now, I'm going to make one more comment and then I'm going to open it up for questions. And this may be the most important thing I'm going to say today. because I think my purpose in being here is to say this to you. As you finish your degree here and you get out into the working world, or if you're working now and come into school at night, whatever your situation is, you're going to have an opportunity either now or in the future to invest money, to take your income and invest it. The only way you're going to get ahead, the only way you're going to plan for your retirement and your long-term sustainability economically is to invest your money. And so everybody in this room needs to go think about, when you work for a company, a 401k. I want everybody to remember that, 401k. That's the IRS code, but it allows you to take your income from your employer, or if you're self-employed, you can put it in another vehicle, but it allows you to take your income, not pay taxes on it, stick it into a bucket called 401k, invest it in stocks and bonds and other assets, and watch it grow over the life of your working years. And I promise you, if you do that, it's going to help you meet your financial well-being. It is the greatest investment opportunity we all have. I'm in one. I know my teammates in the back invest in 401ks. But if I'm doing my job to help light the way to financial well-being for y'all, not understanding what your definition is, please, when you go to work, ask about the 401k or 403b, whatever it may be, depending on what industry you're in. But start putting money in there and put it in there every pay period. Whatever you can afford. Whatever you can afford. And if you say, I can't afford it, I just don't have enough, it's all gone. You cut something out. Cut something out. You know? Skip breakfast on Saturdays and put that money in there. Whatever it is, start putting the money in there and it will grow to be very, very important to you. So, I'm a purpose-driven guy. I work for a purpose-driven company, and I hope you all remember 401k. Thanks for your attention. Dean Abbey, we got some time. If anybody wants to pop questions at me.
Please.
Yes, ma'am.
What are some of your other investment vehicles for small business owners other than 401ks or 403bs or whatever?
Sure. Well, I mean, there's any company with excess cash can put their money into an investment vehicle with us. We usually primarily use mutual funds because they're the most inexpensive way for someone to invest. And, you know, a lot of small business owners say the best return they can get is keeping the money in their business. But if the business actually has excess cash, I would talk to an investment advisor at a bank, or there are other places as well. We have them in all of our branches, and talk about investing your money. You know, they'll ask a lot of questions. How long a time do you have? When are you going to need the money? What's your risk tolerance, etc. But mutual funds are a great way to get a diverse investment pool at a very low cost.
Okay, thank you.
Thank you. Good question. Yes, ma'am.
Is the 401k and 403b only available to workers? How about students who don't work, people who don't work?
Yeah, well, I mean, the 401k is geared towards workers, but there are other things you can put your money in. If you had income, you know, the Roth IRA, there are IRAs you can put money in to get tax deferred. But I was really anticipating you getting that job.
Oh, yeah.
And when you do, ask about that 401k plan. Or if you're a teacher, they have 403bs, etc. Yes, sir.
I'd like for you to discuss briefly some of the effects that the regulations that you talked about that have taken place over the last 5 years. How has that affected the ability of banks to serve the consumers and small business owners and people in those other?
That's a great question. Who put you up to that?
I came up with it all by myself.
Yeah, I know. That's a great question. That's a really great question. You know, with the through the recession, probably the most famous regulation was put out by Dodd-Frank, 2 senators. And they've done a lot of things that force us to be more sensitive to consumers' needs, to be more educational with consumers. They have also, at the same time where I think a lot of the intentions were good, were to protect consumers, in many cases they put restrictions in there that probably weren't in the best interest of the consumer. And I'll give you an example. Right now, a young man came in to get a mortgage from us. He is in between jobs. And he left a job, did fine there, and he's got a letter of employment from his new employer, but he cannot get a mortgage until he actually starts the job. That he is deemed unemployed even though he will have a job. And that was put in there as a regulation. And it meant to protect the consumer so the consumer didn't go buy a house when they didn't have a job, but they didn't think about the ramifications for somebody who was in between jobs. So that's just one example. I think, overdraft fees are, they're expensive. And there's been a lot of protection on that to make that more consumer friendly. But the biggest change for us and the biggest hardship for us is not in the changes of how we deal with consumers or how we deal with corporations. It's the amount of people that we've had to hire to answer the regulatory questions and to do the regulatory paperwork. So we have to fill out, this is probably more than y'all want to know, but we have to go in front of our regulator, Federal Reserve Bank, once a year and ask the Fed, can we increase the dividend to our shareholders? And to do that, we had to fill out 1,200 pages of questionnaires. 1,200 pages. And we have had to hire 14 PhD types to do the work. And so, in that sense, it isn't helping anybody, but it's costing us a lot of money. Now, I guess the Fed's saying it's helping the consumer because they're protecting to make sure we don't pay out too much of a dividend. But it's a great question. The regulations are meant to be good, and in some cases they are, and in some cases they didn't use enough common sense, enough what if.
Right.
Great question though. Yes, sir.
Well, Mr. Smith, a lot of our MBA students and business students are here. I want you to tell them what kind of skill sets you are looking in a new employee and what kind of a skill set they need to have 5 years from now to have a job with Suntrust.
Sure. A terrific question also. If you work at a bank, the first thing I would say is we want you to buy and believe in our purpose. So we want to get that buy-in first, the emotional connection. Secondly, we want people with good communication skills. Communication is so important. And communication needs to be both verbal and written. So that's really important. From a technical or analytical perspective, we think accounting, Dean, we talked about that a little bit before this. We think accounting is sort of a really core building block for bankers to have understanding of basic fundamental accounting. And then I guess for the 5 years down the road, we're looking for people that have leadership skills, people that are proven leaders, that can lead people, that can lead our teammates. That's as you stay at a company, whichever company it is, that's probably the one key attribute we look for is leadership skills. But getting back to communication skills, believe in our purpose, and we think accounting fundamentals are real important for a banker. The other thing I would say is probably not is quite as overt is that we like people that can sell, because everybody, no matter what you do, you're selling one way or the other. So we do think sales skills are also important, and we like to look to see what sort of propensity one might have to be a good salesperson in our organization. Thank you for that question. Yes, ma'am, back in the back.
I'm not sure how big you all are on like school loans and things of that sort, but I was wondering, do you all compete anyway with like the student loan forgiveness programs that they have out as you are, speaking to the students?
Yeah, so on the student lending side, we do the student lending through the federal programs. But to be honest with you, right now, we don't have many student loans on our books. We have sold them to others because it's really gets back to what I mentioned earlier about trying to have not too much of any one asset. And we had gotten very, very big in student lending, and we're sort of tailing it back. Not that we don't have confidence in the student's ability to repay, but just like on the single family, you have too much of any one thing, it can be not a good thing for you. So we're right now at this moment, we're not a big student loan lender.
40 years ago, what made you want to work with Suntrust?
God, that's another good question. I went to work for Suntrust. It was then called Trust Company of Georgia, and it merged with a bank in Florida in 1985 called Sun Bank, so we took the Sun and the Trust and put them together. But I went to work there because, and this is going to make me look like I'm a liar, I didn't have any accounting. But I did have some sales skills, and I believed in the purpose, and I could communicate pretty well, I think. I was a liberal arts major. But I went there because I had an excellent training program, and I was going to get the accounting and the finance courses through their training program. And I admired the leadership of their bank, not only for their business acumen as a banker, but because almost every senior executive at that bank was active in the community, did something with their free time to benefit the community. And that meant a lot to me. And I've done that my 40 years too, been very active in not-for-profits because I believe that that's my obligation. I also have a lot of fun doing it. But I went there, good training program, management was to be admired, and they were deep in the community. And so the follow-up to that question is, why did I stay there 40 years? And I stayed there 40 years because I always liked the person I worked for. Most important thing is who you work for. And I've always been fortunate to like everybody I work for. Almost 100% of the time. There was, yeah, well anyway, it was close. And I've had a chance to do a lot of different things for them. So it's been a very enriching career in that I've done commercial and corporate lending. I've done trust work. I did the mutual fund business for us. Now I have the privilege of managing a bunch of teammates here in Atlanta. So it was a diverse career, and that's why I stayed so long.
Thank you.
Yep. Yes, sir. Way back in the back.
Yeah, as a customer and shareholder and the recent agreed settlement of what, 968 million?
Yeah.
Something along those lines.
Yeah.
I have to believe that I'm going to feel some sort of a negative impact. I mean, you just don't come up with $1 billion and it not be passed along somehow.
Yeah.
So what do you all anticipate?
So the answer is, $1 billion here and $1 billion there, you're talking about real money. We have really paid a lot of money out to settle mortgage issues. And you never say you're over, but we think that the egregious mortgage loans were made prior to 2008, and we have about dealt with all of those prior to 2008 vintages of mortgages. So we think the worst is over. And who suffered? Two groups of people. The consumer hasn't suffered at all because mortgage rates are driven by the market. The stockholder suffered greatly, and I'm one of those. And the people that work at Suntrust that have compensation plans suffered, as they should, for those losses. But it's really been hard, and hope it's over. But the biggest pain went to the shareholder. Our stock price in 2006, 2007 was roughly $70. When the recession came, that stock price went down to $8. And it's now back to $38. That's why you go mutual funds, because you diversify. But part of the reason in that decline in stock price was the mortgage issues. Let me make one other comment. before there's a question, and because people always ask me, usually always ask me, and I'm sure somebody would, what's the biggest risk that Suntrust faces as an organization? And I'd say there's not just one, there are two. It's not that we have too many bad loans. Chris Rutledge won't let us. It's not that we're going to get hurt on non-performing loans or past due loans or whatever. It's that we don't have the growth to succeed. That's the biggest risk we face right now. We have to grow as an organization. All of our teammates have to be more productive. The second risk is having the workforce available to us to do the job we need. So those are the two big risks that we face as a company. Yes, sir.
Okay. One of the main concerns of our students after graduation is finding a job. You
Yep.
just mentioned
Yep.
you need,
Yeah.
job-ready
Yeah.
student to come and work for you. Could you share with our students what type of jobs are available?
Sure. So we still have the training program that I was lured by. It's not hiring massive numbers of people. I think we'll hire probably something like 12 or 15 students to go into that, and those students will come from all over the Southeast, Georgia schools as well as others. But in the retail banking part of the business, we have phenomenal opportunities to get in at the ground level, customer service rep, personal banker, whatever, and grow up through the retail chain. So there are lots of opportunities there. There are lots of opportunities in IT. They're always hiring on the IT side. That's one group that hadn't laid anybody off in our company.
One more thing.
Yeah.
As a teacher of statistics, would you please share with our students how important it is?
Probability, everything is based on probability.
Because if it comes from me, they don't.
No, it's 100% true. When we measure risk, it is statistically derived and driven. And when we make a loan, it's sort of accounting driven, understanding the fundamentals of the balance sheet and the income statement through accounting. But statistics, absolutely.
I tell them when two candidates are on the table and one with strong statistical ability, knowing some statistical software, that's a for sure candidate who will get a job.
Yeah.
Is that a wrong statement?
No, you're exactly right. Those 14 people that we have filling out those 1,400 pages are all statisticians that, have to evaluate probability and risk default, et cetera. So you're exactly right, Professor.
Are you listening?
How about this group? Anybody got a question back here? All right, go.
The corollary to the risk, what's the opportunities that you see?
For the industry or for the individual? Or both? For the industry? I think that the financial institutions are going to have to get more innovative as they go forward. The old way of doing it probably isn't going to be, either isn't working or isn't going to be available or competitive in the future. So I think technology is going to change a lot. I think the way we interact with our clients is going to change a lot. And I think the people that are ahead of the curve and are able to come up and be creative with solutions, but still have that emotional connection with their clients, like we do through Purpose. I think you need to do both of those, and you need to be moving very fast with both of them. And I think if you do that, you're going to succeed. I said growth is our biggest risk. If we grow fast, and we release our numbers October 17th, I feel pretty good about them. But if we grow fast, then we'll outperform everybody. But it's a changing business. I thought an ATM was a monster when it came out in the late 70s, and now it's my kids say, "Why would you go to an ATM? You just use your iPhone." So anyway, there's a lot of opportunity in the business. Yes, sir.
So that actually brings up another topic that ties to risk.
and that's with data security.
Whew,
Most of the banks are,
that's the hardest one yet.
well, most, obviously most banks transitioning from magnetic strips to chips in their cards over the next, couple of years.
Yeah.
Now that the retailers are suddenly inspired to speed that up, maybe it'll happen faster, but where do you see Apple Pay fitting in? Just the ability to touch a phone. Somebody was asking me last night in a class what I thought about the security risk of Apple Pay versus a chip, and I don't know.
I don't know either, is the answer to that. But I do know this, the payments business is a big business. And here in Atlanta, we got the 3 biggest payment businesses located right here in Metro Atlanta. Then you get Apple getting into it. You got this thing called a Bitcoin that the head of the Atlanta Federal Reserve said it may be something to that. So the answer is I don't know. And but I do know that just like the banking business, the payments business is going to continue to evolve and change. And if there's a magic solution out there, it probably hasn't been introduced yet. But there will be more and more changes, more and more money going into that. Yes, sir.
One more question, I think
Yeah.
that will be lined up.
Excuse me. My name is Abdullah. My major is international business.
Okay.
And I want to ask, does Suntrust Bank has any plan in their strategy to open a branch in Gulf area, like Saudi Arabia and United Arab Emirates? And does they have any plan to open a branch? And I can be as an agent there.
Yeah.
I like that.
I like that.
I like that.
That's sort of like leading the witness, isn't it? The honest answer is no. Suntrust operates in the southeastern United States from Baltimore to Miami and as far west as Memphis, Tennessee. We think we're in the best part of the United States of America. We only have 25% share. There's 75 to go get here. We have had offices in London in the past, but we are not an international bank in the sense that we don't have offices overseas. We have an elaborate correspondent bank network throughout the country, so any of our clients that do business in the Middle East or Asia or India or wherever, we can serve all of their needs. We can handle all their foreign exchange transactions. We can work with them on global trade payments. But as far as having a physical office, we're not going to go there. We're going to work with correspondent banks. We'll find somebody over there that will partner with us. Thank you. All right, this will be the last one, promise.
What is the main purpose of Suntrust Bank? Because based on your conversation, I understood that the main purpose is to help people.
Yes.
But what I understand that the main purpose of any bank is to make money.
Correct.
So I see that contradiction.
Well, I would argue they're.
I know you're a good seller, so you sell your product.
Fair enough. I would argue they're not mutually exclusive. You can do both. And in those 4 examples I gave you, we met the needs of our clients. We helped them move towards financial well-being, and we made money off it too. But now just remember this. So not trying to defend our industry or whatever, but if a good return for a bank is to make 1% on the assets that you have, just 1%. On making a loan, we got to be right 99.5 times out of 100. So we don't have much margin for error in our profitability, but we do need to be profitable so that investors will continue to put capital into us, and so we can take that capital, leverage it, and lend it to you when you start your business. How about that?
What about, okay, that's good, but what about this? You told us about your country, like you help people to be educated, all right?
Yeah.
To be educated, to find a job and come to a bank and lend money from you, or just to help them for free? Because if you said that, you are as a charity, you are not a bank.
No, we are a for-profit organization.
Okay, that's good.
We are but we have a foundation which does nothing but give out money to not-for-profits to help students, to help organizations.
That's part of the social responsibility, right?
Correct.
To give your company a good picture.
Right.
And make money at the end.
I knew I went one too many.